There have been a number of announcements made over the last several weeks by the Finance Minister. Some didn't have very much of an impact, but other moves, for example, the slashing of corporate tax rates by 10% is something which has had a profound impact. It's been very well received. But if the central issue now in India is of sentiment in the economy, is of demand in the economy, whether it exists or not across the board, if so, what sectors, about middle class aspirations and whether there's enough liquidity in the market, these are all issues which are linked overall. And today there was an effort to try and reach out to people across the country to argue that, look, the situation is not as bad as some indicate that it may be. Let's listen to what the Finance Minister had to say before we start this debate.
I have not heard liquidity as a problem from anybody, particularly for the small finance banks. It seemed as though they are going on a smooth path. They've not had a friction or a blip in the last 1 year. The service sector is showing very high appetite for credit, and because today more than 50% contribution to the GDP of the country is from the service sector, there's immense possibility to be able to reach out to them. In fact, many of them, even at the very beginning of their intervention, said they quite understand and appreciate the government's measures in doing the banking outreach, going to the district, having the NBFCs along, and also reaching out to clients. So the message I get from this meeting today is consumption is happening. I feel demand will get back and motivate our economy to move at a faster rate, in which case the coming half year things will have to look up and pep up every other sector, even if there are one or two sectors in which there may be some stress.
Well, joining us now to look at the state of the economy and whether the announcements made by the Finance Minister are substantive, Surjit Bhalla, former member of the Prime Minister's Economic Advisory Council, Abhay Aima, the Group Head of Equities at HDFC Bank, Amitabh Dubey with us in the studio, and Sanchita Mukherjee, a leading private wealth manager. Dr. Bhalla, let me come to you first. You heard what the Finance Minister said. She says, I have not heard liquidity as a problem for many. If anything, more liquidity is reaching them. They see more demand. However, they have reservations because of RBI rules. If we were to write off the top, analyze this remark about liquidity being sufficient, that's the argument, would you agree?
Well, the 2 points that the Finance Minister made, one, as you rightly stated, that liquidity is not a problem, and second is that the second half of this fiscal year should be better, perhaps even much better than the first half. I don't have any disagreements on either of those 2 points. However, there is something we should all look at as to what did the Finance Minister mean that liquidity is not a problem. For example, over the last year or so, the RBI has been stating that liquidity is a problem, and analysts have been stating that liquidity has been a problem, a major problem.
Yes.
And that persisted right throughout the first quarter or the second quarter of the calendar year. Now, in my books, liquidity is a 2-part problem. First, is there money available? So, for example, a bank says, listen, you can have any amount of money you want to borrow at 10% interest rate. And the other is the other side of the liquidity problem, saying, listen, I can't reduce the rate from 10%. That has to do with monetary policy. So I do think that the fiscal policy side, especially after the rate cut, is really in very good shape and possibly getting better. The monetary side, liquidity is fine, but we had this liquidity problem throughout last year, and the economy didn't move forward, went down. So I think it is important to analyze the cost of credit rather than the availability of credit.
Okay.
That is why most central banks around the world, you will not find anybody any central bank in the world talking about liquidity,
Right.
but they all talk about rates. So
Right.
I think that's where we are at, that liquidity availability is not a problem,
But the
it's
cost
the
of credit is the
price
key
at
issue.
which liquidity is available is a problem.
Amitabh, the other point that Nirmala Sitharaman mentioned is that she made a bit of a forecast. She said that consumption is happening, demand will be back, and she said that this is going to happen in a finite period of time. Are you as optimistic as she appeared to be?
Look, I've been traveling around quite a bit in the last week, and the talk of the slowdown is universal. Shopkeepers, retailers, wholesalers, middle class, it's the number one topic currently on everyone's minds. As finance minister, one of her jobs is to talk up the economy. That is her job. She's doing that. That's fine. But the problem is that she seems to be floundering as well on this job. Clearly, consumption is not reviving. Household savings are at a 20-year low. People are clearly, and again, I've seen this in my travels, are pulling in. They're becoming conservative in their spending because their expectations are negative.
Okay.
So really, I think that there is a confusion. So, for instance, if she's talking about liquidity, if she is saying that there is ample liquidity, why is she simultaneously forcing banks to hold loan mailers? Because that's what you do when there isn't money and you have to start dishing it
Because
out.
demand is low.
Yeah,
She's not denied that demand is low.
No, but
so if you have a loan mailer, it's to stimulate.
Correct. But none of the
Stimulate
strategies,
demand,
no,
right?
that's solving a supply problem. None of her policies are trying to address the fundamental demand problem. And economists have been saying this ever since she's been trying out different steps. Even the tax cut, the corporate tax cut, which is going to really benefit 0.7% of corporate India, because 99.3% of firms already had a 25% tax rate. Even this is not going to stimulate demand. If you had to take 145,000 crores and do something with it, a much more efficient thing would have been to either start rural infrastructure programs that take this money straight into the pockets of millions of low-income consumers, or perhaps a GST cut, which would straight away benefit millions of consumers. But instead, she handed it over to the Ambanis and Adanis, which to me shows a complete lack of clarity and understanding.
Dr. Bhalla, you had your hand up. You want to respond to that? That, across the board, across various sectors, there appears to be distress. Yes.
Yeah. So just one simple factual point, which Amitabh pointed out, that the 25% tax rate is being paid by 99.3% of the firms. Now, when the budget was announced in July 5th, and everybody pointed out that this 99.3% only accounts for something like 10% of the total tax revenues. So, you can cite the 99, it's like Ganga Gai Ganga Das and I'll criticize, or Jamna Gai Jamna Das and I'll criticize. The point everybody made, several people, perhaps even Amitabh made, was that 99.3% of the firms only account for something like 10% of the total tax revenue. So the first point is it does benefit a lot of firms, not a lot of firms, but a lot of taxable revenue. Second, the 15% tax cut, or the 15% tax rate rather, for new firms is extraordinary. Stimulus is extraordinarily historical. So I think that tax cut will really benefit manufacturing in India, will really benefit Make in India, and will really benefit the GDP growth rate and therefore the demand. So let's just be careful about saying this does nothing. I think, as I stated in my earlier comments, we need more. We need monetary policy in particular to come and aid the fiscal policy, which seems to be very much in the right direction.
Okay. Sanchita, among the other steps, we've spoken about the corporate tax cuts, 10%. Minimum alternative tax has been cut from 18.5 to 15%. There's been a rollback of the enhanced surcharge. Then, of course, there was that 1.76 lakh crore bonanza to the government, not immediately linked to this, but in the overall economy, the sum in the government would say would benefit. And the announcement today. Today was essentially an announcement. It wasn't really any new steps per se. Has enough been done to stimulate growth?
I will just talk about a few numbers. The average effective tax rate for select, say, 3,446 listed companies for financial year 19 has been 32.4%, with this new effective rate of 25.17, the tax saving for a sample of 3,446 listed firms could be over 44,000 crore. And this would translate to price cut across sectors of 2 to 5%. Now, my question is, will that spur demand or not? Definitely
It depends if it's
would.
passed on, right?
It depends if it's passed on. Why not? And it will be eventually in various forms, because corporates also would like to see earnings and revive the demand. However, what I would like to really talk about that, in India we usually paint fiscal deficit as the mother of all villains. But let's understand, when we have growth ambitions and projections of the nature that we have, painting fiscal deficit as the mother of all villains and linking it without any consonance to the growth projections is really not a good step. What one needs to understand in a country like ours, which is one of the few countries in the world which has a growth scenario in a global arena where growth is actually falling off the platform wherever we see, it is very difficult to link the fiscal policy in tandem with the monetary policy. Fiscal deficit and fiscal policy cannot be an a priori condition to the monetary policy. Let's understand that. Secondly, when we were talking about whether we have done enough on the fiscal front or not, yes, definitely. I think this announcement went a very long way. It has been historic. Everybody knows for decades, India has had one of the highest corporate tax rates ever. But now we can proudly see amongst emerging and developing countries, we have redeemed ourselves, and we are actually better off than even Brazil, Argentina, China, South Africa in corporate tax rates after this tax cut. So it's been good. What I would think is, apart from monetary policy, we can do much more on the fiscal front in terms of probably what the government has been doing. It has been curtailing revenue expenditure. But it is, on the other hand, now focusing on capital expenditure.
We'll talk about the fiscal side perhaps later on. I want to go across to Abhay Aima. Mr. Aima, some of the other key points made by the Finance Minister. She says the affordable housing scheme has taken off well. This is an indicator of greater demand. She asked about the auto sector, where there have been reports of upwards of 5 lakh job losses in a finite period of time. She broke it up and said, look, commercial vehicles, as far as that sector is concerned, it's not a problem because people are just not buying vehicles at this particular juncture. It's happened in the past, and the economy will recover, or the demand will go up. And passenger vehicles, she said, is sentiment based. That's what she was told, but she didn't really announce ways in how that sentiment would be overcome. So a couple of points over there about the auto sector and the housing sector. What is your takeaway from those remarks on these areas?
See, Vishnu, you have to understand, you have to go back slightly pre-election, the last term of the government, because it's necessary to correlate that. So you had demonetization, you had GST, and you had elections. Now, demonetization, there's not too much of empirical evidence how it pans out, but it clearly was a discomfort. GST, everyone knows, there is evidence that once GST is introduced, there is a slowdown for a year to 2 years before it picks up very fast. And then there is the way of doing business, which was changed. So a lot of people were used to doing business in a particular way. That this government definitely came out and said, whether it was the NCLT, whether it was the RERA, introducing things like that. So the slowdown happened way before the elections. But if the slowdown was 30%, what really worked against the economy was the sentiment, because 70%, I think, was attributed to, according to me, was the sentiment. Now, the problem is that sentiment over a prolonged period of time can actually result in a further slowdown. So the budget did nothing to help that. In fact, it only worsened it. That made the problem even more acute. But to be fair to the government, I think, having seen that, the good thing is they recognized it in a short period of time, and subsequently after that there have been constant steps, not only in terms of approach, the way the Finance Minister speaks. She is not discarding things like what, I don't want to get into details, but it's not an offhandish approach. There is concern, and very substantial steps have been taken. And to say that this is not affect the economy, or someone gave some stupid percentages, But the fact is 1,76,000 crores comes into the economy. And I would not even comment on when someone says Adani, Ambani, because that's too cliched a term, it's more for political debates. But clearly it is recognized, and clearly there is a strong, what is more appreciable is that the steps are being taken. No one is living in an ego saying that I have done this and I will not reverse it. So given all that, I think to a large extent what the finance minister said today vis-a-vis housing and vis-a-vis automobiles, I would agree, though I wouldn't say the second half, I would say the last quarter, because it will take some time for this to pan out, and one should be expecting more steps. So by and large, I think we are 80% there if we go on like this.
Okay. Dr. Bhalla, this is, when we talk about sentiment in the economy, we often refer to this at a macro level, but at a micro level, when you've got small banks or relatively small banks or individual banks which are distressed, for example, PMC banks, when you've got customers who were initially told you can't withdraw more than 1,000 rupees a day, that's gone up to 10,000 rupees. The RBI getting involved over there, possibly because of non-performing assets which this bank has supported in the past, and you've got people who have their life savings stored in the bank, worried about how societies are going to pay, worried about how shopkeepers are going to get their money to buy so that they can sell to others. When we use the word sentiment, isn't this primarily also something we need to be looking at? These small issues are in fact not small at all, they're huge.
Well, very important point actually, and therefore what your question leads up to, there's no denying the fact that sentiment is bad, but how many of us have really tried to look at why is sentiment bad? So the quick and glib answer is because the growth rate is low, because the GDP declines. Therefore, my next question is, why is the GDP growth low? And in this regard, let's look at the trajectory over the last 5 years of this government. 2014-15 and 2015-16 were two drought years, successive drought years. And this is only the 5th time in Indian history since 1870 that you've had two successive drought years. Clearly not an aid to sentiment, and not an aid to growth, and not an aid to consumption demand, which I think everybody around this panel and everybody agrees. Then in 2016-17, you had demonetization. Now, whatever your views of demonetization might be, and as you know, I think that was a very positive economic move, it is bound to have led to uncertainty as to what is going to happen. Then the 4th year, we had GST. Again, no matter what you might think about the implementation of the GST, many of us, if not all of us, welcomed it, but there were problems in implementation, and that is still going on. So for 4 years, you had problems at the non-monetary level.
Yes.
And what did the monetary authorities do? They jacked up real rates, such that real rates in India today and last year and the year before are the highest in the world and the highest ever in India. Real rates I'm talking about. So therefore, one has to identify the cause, and you'll get to the solution or the appropriate remedy. Fiscal policy has been expansionary throughout, and now the government has taken a very, very bold and risky and not so risky step of really easing sentiment, of trying to rekindle animal spirits.
Okay.
So I think the ball is now, as it has been for most of the last 3-4 years, squarely in the monetary policy court. The RBI NPC meets next week, and let us see whether they provide the impetus needed, the extra push needed for us to get back to our potential GDP growth back of 7.5%, and, as you rightly said, improving sentiment.
Right.
Just think about it. We know that liquidity is not a problem. The finance minister said it, you've said it, everybody agrees. But the problem is, we go and ask the customer,
it's a huge disconnect.
What does he think about liquidity? And he'll say the cost is too high.
Amitabh, the cost is too high, the cost of capital, he was referring to it earlier on, and also sentiment associated with issues like this. We've seen banks failing in the past, and it's a bad story that doesn't go away in the case of cooperative banks. It's back now with lakhs of people potentially affected.
Yeah, so see, my point once again is that the government is taking a lot of steps. I have no problem in isolation with the corporate tax cut. India's corporate taxes were above, as she said, the regional average. But it's not trying to solve the problem that we're facing right now. Right now is a problem of demand. Everyone knows it. Everyone says it. It's a problem of demand. And a corporate tax cut is going to take too long to kick in, and its distributional effects are very skewed. The gentleman complained that people are saying Adani, Ambani, but it is the Adanis and Ambanis who will benefit foremost from this tax cut.
That's your political argument.
But it is also true, 0.7% of the top companies of this country are going to get a handout of 145,000 crore rupees. If you wanted to give away 145,000 crore rupees, it should have been at the bottom of the pyramid, not to the top.
You want to reply to the specific point that Amitabh has mentioned now for the second time on the show, that the beneficiaries of the tax cut are not really the people who deserve it?
Well, no, because I do think, yes, I do think it's a political argument, because I do think bringing down the corporate tax rate has been historic. I mean, there's no argument on that front, and it'll not only spur the supply side, it will also spur the demand side in terms of kicking up the investment cycle and consumption, and obviously increasing the positive sentiment, which was much required for. I agree with Abhay in terms of, a couple of months back we would have been very negative because we didn't know. I mean, the economy was really struggling. There were no announcements which were happening. We were wondering what's going on. But I think with this single move that Friday, we have addressed a lot of things, and it's huge, and there will be a lagged effect. Let's understand, when we are talking about liquidity in the system, yes, liquidity has been tight ever since the INF's default in September. Right. But if you notice, from June onwards, we have been liquidity surplus. So why is it that credit has not flowed to the larger economy? Okay. It is because of the NPA situation. Right. We need to address the IBC reforms more aggressively, and credit now needs to start flowing. So linking, in fact, the external benchmark rates to lending rates is a very good move, because this will ensure that the transmission happens. Rate cut alone would not help, because transmission hasn't really happened.
Okay, well, that helps to answer a lot of the questions, certainly lots of perspectives. I think what we didn't get around to discussing, because we are out of time, is should there be income tax cuts? What about GST cuts? Will that further stimulate growth going forward? Perhaps we can leave that for another occasion. I'd like to thank all of you very much for joining us. Is the glass half empty or glass half full? I think we can keep asking that question for an indefinite period of time. Thank you all very much for joining us.